Okay, shall we start? So welcome again, everyone. So today I'm going to talk about master your emotion in trading. Okay, let me know if you have any question along the way. Either you can send in at the chat box if you're tuning in Zoom. Okay, you can send the question in Q&A or just a chat box here. All right. Okay, so disclaimer before I start the webinars as usual. All right, remember that everything in this video is educational in nature. Nothing should be construed as investment or trading advice. If you come with a trade, please do your own due diligence before you get trade. Okay, I just want to highlight the risk warning over here. Trading forex and CFD may carry significant risk to your capital, and it may not suitable for all investors. So please come and join the webinar and learn together. All right. Introduce your host today. My name is Peggy. I'm an investment analyst and a prop trader as well. If you want to know a prop firm, you may just Google it. Basically, you need to pass all the target profit, which is phase one, 8% or 10%. It depends on the prop firm, and phase two is about 5% target profit. They have very tight maximum daily dollar, which is 5% of the capital. Okay. So basically, if you pass the prop firm, they will give you the capital or the money for you to manage and trade with the profit split either 80 or 20. Is depend on the prop firm as well. Okay, so today what I'm going to talk about understanding market psychology, common psychological bias in trading, mastering master psychology for success. And the fourth one is, should you have a daily target? Understanding a law of large numbers. Okay. And okay, the past one I'm going to talk about, which is understanding the market psychology. So it's referred to the collective mood and behavior of market participants, with influences by price, movement, and trend. Okay, there will be key aspect includes market sentiment. So basically, if you were to look at the news calendar, for this week, there will be a lot of high impact news. That's why you need to look for those like market sentiment. If you were to trade like gold, it's very volatile. We should already know that. Okay, the overall attitude of the trader and investor toward the market sentiment can be bullish, bearish, or neutral, or just ranging. Okay, and the herd behavior is referred to the trader often follow the crowd, which can lead to the market bubble or crashes, fear, and greed. Those are primarily driver of the market behavior. Okay, fear can lead to the panic selling, while greed can result in overtrading and risky investment. You will just like plot it into the chart, for example. Let's just we have quick look on my just look at gold, for example. Okay, just ignore this is my kind of like trade setup for gold. Let me just remove it. Okay, if you want to plot that in the chart, right? You want to look at a quick look on news for this week. Okay, the time zone you just change according to where you live, which is maybe I just change to the UTC +0. Where's UTC here? I cannot find TC GMT. Okay, here. Okay, I just choose the UTC. Okay, so basically just look at the new you able to trade. We should really take note of the sentiment which is coming today and until Friday, which is we have a non-farm payroll. So these are the news that you need to take note of. Okay, even though you are either technical or you cannot just ignore the fundamental, because this is high impact news. Just to know of that as well. Let's just have a quick look and we plot that statement in the chart here. You want to look at gold. Basically, if you want to look here for daily time frame here, you may identify this as your key level. Okay, And if you were to become one of those like either retail trader, let's just say we are retail trader, usually you were to see like that, either you have a fear. For example, you identify this your resistance level, which is we're going to sell at this level. Okay. If you're a scalper, what are you going to do with it? For example, if I gonna highlight the zone, okay, I short in here. I have the sell entry for gold at 24.20. Okay, if you are a new trader or you kind of like, you know, panic or you see that price falling here, it's about like 30 pip for gold, which is you still like floating profit. And then price is reversed here, revert up. So now you're floating loss, right? Because your entry is here. And then you see price is go all the way up to 24.50. I short here one lot. Okay, from like positive 300, price reverse. Okay, I did not achieve my stop loss, and then price reverse. I had a floating loss like 500. Then the price come down again. If you are news, if you are a new trader, okay, you are new in the market, you might either you have a fear or you think that okay, price might revert and hit stop loss. Either you cut loss or you entry here, you have a very tight stop loss, which is 30 pip, for example. Maybe you have like 30 pip here. Price will hit your stop loss because from your entry at 24.20, it's go all the way up to 24.25. So it hit your stop loss and then now price is revert back to your either break even or your entry, meaning that if you doesn't know how to like if you doesn't know the behavior of gold, because you know that gold is volatile, if you have very tight stop loss, the high chance for you to hit the stop loss is very high. Okay, so either you manage your lot size and you need to know how to look at the key level, where is your key level for the first resistance, which is you need to highlight your zone, your sell zone here based on H4 time frame. You work for scalping and then you have very tight stop loss. If you just stop loss based on 30 pip, price reward here 50 pip, and then now reward for your entry. What is my entry? My entry exact at like 20. 20. This is my sell entry, which I still hold at like 24.20. That is my sell entry somewhere here. Okay, now price go back down again. Should I ship my stop loss? No, I did not ship my stop loss to break even because to me, I still manage my loss side here and this is my sell zone. So when price come here, 30 pip, I did not close because I target my TP is here. So basically you need to know the instrument that you trade. Okay, if you trade gold, you should know that gold is very volatile. If you just put very tight stop loss, the high chance you will hit the stop loss. Okay, so you see that price is still falling and my TP is at this is my TP. Okay, I aim for 80 pip. Okay, for my 24.20, I aim for 50 pip or at least 50 pip or 80 pip for gold. Okay, so you need to know that behavior as well. Even though if you trade like EURUSD, GBP/USD, you need to know, or if you look at the chart that every day, you will know their behavior. Okay. Common psychological bias in trading, or say is confirmed by the lead trader to seek information that confirm that existing belief, leading to buy adjustment. You will provide example and discuss how confirmation bias influences decision making in trading. I don't know why that has like double wording here. Let me just adjust a little bit. By the end of the webinars, I will look for the trade setup for you guys, and you can request as well. I just delete everyone here. Overconfident. Okay, I just okay, just make it nicely. Okay, what about the loss aversion described to the tendency to prioritize avoiding loss or maximizing gain? We will explore how load affect risk taking behavior and portfolio management strategy. Okay, overconfident Okay, this one, it could be like, for example, it could be like it can lead the trader to over estimate their ability and underestimate risk. So basically, have you ever feel like you have a overconfident on your trade? I used to have that. Just to share with you guys. For example, just take gold for example here. Okay, even though let's say I'm really confident that in this zone or this sell zone, to me, gold might revert from this level. I have a confident one is that this is my price action for gold. Okay, and there will be I confident because there is be divergence here. In trading, it's good for you to be confident in your trading, but you need to have like backup plan, meaning that if you over too confident that okay, you see that okay, price action here, you have the divergence here, so you have two confirmation. And if you trade like you really confident, you just put a 10 lot, for example 10 lot here. What about if price reverse here, because you are over confident, you have like 101, you know, confident that you short here with 10 lot, for example. What if price reverse here for 20 pip? You will lose $2,000. Okay, if price revert, but then after that they revert here, you might see floating lot and then continue to fall here. So to me, when I trade gold, I don't go for my like full margin. Basically, either I put here, okay, 10 lot that I'm willing to lose, but price go here, I might have like 5 lot here. I might have another spare lot side, another 5 lot, just in case if price reverse here. Okay, and I know that from here, price will fall, at least this one in my first CPU sheets I mentioned. I confident because my price action divergent, this should be like the number 24, 25, right? I confident, but I don't go for full margin, okay? Because for gold, it's anything can happen in the forex market. So I still have my spare lot side, another 5 lot. So I short here 5 lot, for example, I will have another 5 lot up here. But if price just continue to fall here, okay, that is okay for me. I just earn 5 lot here. But what if price revert? Okay, another 5 lot here, and you need to ask yourself where your stop loss if you were to place another 5 lot over here. So overconfident is good, also is bad in the sense, right? So you just need to kind of like have the backup plan. So basically, okay. And her mentality described in the tendency of the investor to follow the cloud, often leading to the market bubble or crashes. Okay, we will examine the role of the hard mentality in the sharp market movement and investor behavior. Okay, and the part 3, okay, how you materialize for the market success. First, you need to have awareness. Okay, I think this slide is very important. Okay, I mean to me and maybe some of you guys, you need to have awareness, which is you need to recognize the buy and exit and understand their impact on decision making. Acknowledging the biases allow you to mitigate their effect here. Education, okay, you need to learn. So basically you need to learn and you need to know that specific pair that you trade. So basically what I discussed with my kind of my friend or my trade community is that if you were just to say you want to master gold, for example, if you want to master gold here, you need to treat them as like your girlfriend or boyfriend. You get what I mean? Because you want to just look at, okay, today you want to trade gold, and then you say that, okay, you want to look at EURUSD, you want to look at GBPUSD, but if you really want to like master like gold or XAUSD, you need to know their behavior is like their, treat them like their your boyfriend and girlfriend, meaning that one gold, for example, they have the rejection, right? That if for scalping either M5 M15, at least you need to close your TP at the specific support resistance based on the time frame that you trade. For example, I trade M5. Okay, I wait for, even though here is my first entry, and then after that I wait to see on my second entry, which is I saw the price action here. Okay, and then you know that there's a divergence here. For gold, if you trade, you need to trade with the divergence because the divergence happen very often in gold. Okay, so for gold, you need to trade with the divergence, which is I use the RSI to identify the divergence here. And price action is work well with gold as well. Okay, just mentioned that this is already earned. Okay, for my first entry at 24.20, my first entry. Second entry is here, slightly below here. Okay, and my TP is at 24.12. They're gonna hit my TP already. Okay, because usually go from here, you will see the bounce up a little bit here and then continue to fall. Okay. And education, I say you need to have the knowledge. If you want to survive in forex market, okay, you need to understand underlying principle help in decision making. Like I just mentioned, if you want to be a queen or king of gold, you need to, study their behavior and like how the price go up here, have a lot of rejection, how you're going to short or buy from there. Okay. Journaling or basically maintain a trading journal to track thought, emotion, and decision, reviewing past trade, level pattern influences by bias, aiding self-awareness. Okay, when I start the forex journeys, I do keep my trade journey because I want to know like whether today I hit stop loss because of what? Maybe because of my emotion. Maybe I'm not have a I'm busy, but I have the itchy hand. I want to trade. Okay, so audit. You can review weekly or monthly, but to me, I used to review weekly because I want to see either I hit stop loss because of what I will have kind of like the Excel file. Okay, I put my entry and stop loss, the reason why I hit TP or I hit stop loss, okay, and then I will review my mistake by that. Okay, so this I used to do that, but not anymore. But it's good for you guys to just start your trading journey or just to track your thought, emotion, and decision. Okay, objective analysis. Okay, this one, basically you just have to have your trading plan. So basically, okay, let's say if you want to trade gold, and then you will see like that. You don't have a trading plan based on whatever you trade. For example, you want to trade gold here. Maybe based on your emotion, you just want to sell here. You don't know why you sell here. Or maybe you just follow other people's signal, for example, and then you sell here. You don't have a trading plan. Just sell. You say you don't bother whether his stop loss or not. You don't have stop loss because maybe your account size is like you have 100K account or 100K to spend, for example, and then you just follow other people's signal. For example, you just short. For example, you just short here. You don't know why you short. Maybe you listen to me and then you say, oh, Peggy short here, you want to follow. It might reverse, I will tell you. It will reverse Ben M5, it might reverse somewhere around here. Again, and then price will fall. Okay, because here have another supply zone in smaller time frame. So you need to have a trading plan. Okay, the next one, you need to have risk management. So you need to ask yourself where your stop loss and take profit, how many percent you willing to lose. Okay, so your risk per trade, it could be 1 to 2% on your capital. Okay, that is risk management. Okay, and cognitive technique. So this is like mindfulness and meditation to develop a self-awareness and emotion control. So basically, if you hit the stop loss, you need to ask yourself, if you hit stop loss, how do you feel? You feel really like angry with yourself, or you feel like you want to have the revenge trading. So if you have that kind of the feeling, either you need to do a meditation or you just find those like hobby for you to help you to calm down yourself. Because if you hit stop loss, okay, and then you feel like you get mad at yourself or your partner, or you have the feeling of you want to revenge trading immediately, it will cause you lose everything. I used to do that. I used to have that, okay, when I was new to the forex market, but anymore. Okay, so the more experience you have, the more you will be like self-awareness, and like you will be successful in one day. So basically, mindfulness, meditation, okay, is a must. Of course, awareness, education, you need to have as well. So you need to basically you need to upgrade yourself. You know, you need to look maybe look out there any like new technique is coming up in the market. Just go and learn. So basically, don't like limit yourself to only like one technique, right? So just go and learn and have like you know like update yourself. So basically, okay, you can seek for the feedback. So basically the feedback meaning that if you trade alone, definitely if you are a trader, you cannot trade by yourself. Okay, you need to have like community, you need to have a friend, you need to have a like mentor, or you need to have a someone to talk to, because I have my own community, okay, because we like to discuss about either trade idea. Sometimes you hit stop loss, you don't have someone to talk to, you can just talk to those like community, your own community. Okay, sometimes you send a feedback, they might, you know, you can get either like the area of improvement as well. So these are good for you as well. And the last one is continuous learning. To me, is a must. Okay, but again, if you want to master either one technique, for example, if you want to master SMC, yeah, that's good for you to master the either SMC strategy or ICT strategy or other strategy. But again, why we keep ourselves continuous learning? Because market condition always changing. Okay, market condition always changing. So doesn't mean that your SMC or ICT, it will work well in the future. That's why we need to keep up to date. You need to look at what's going on for either gold, for example. If you just trade based on correlation, okay, we already know that dollar which is DXY, they has a negative correlation with EUR, GBP, and gold, meaning that if dollar is rising, gold usually will be falling, but not always the case, right? Sometimes you need to look at market conditions. Sometimes dollar is rising, gold also rising, meaning they have a positive correlation. So doesn't mean like every time gold rising, then dollar is falling. Okay, that's why you need to adapt to market condition and look for the changes as well. Okay, should you have a daily target? Like I just mentioned, there will be pro and con. Okay, having the daily target can be both beneficial and risky. The pro is that provide a clear goal and help maintain focus. This is a good one. Okay, encourages disciplined trading and adherence to a plan. This is the benefit. What's a risky? What is a con? Okay, may lead to unnecessary risk taking to meet the target, can create a pressure leading to emotional decision making if the target are not met. What does that mean? For example, okay, the benefit we already know, we have a clear plan, everything. You set the target, for example, you set a target, I used to have that, like I just mentioned. Maybe I set a target for $100 per day. And I just want to trade gold, okay? I set $100 per day, okay? Let's say, what if today market condition is different, meaning that there is no volume, okay, the maybe the gold is just sideways, there is no opportunity for you to hit the target, which is $100 per day, and then it make you really stressful, which because why? For the ranging market, for example, when the ranging market, okay, or there is no volume here, you try to hit your target, which is $100 per day. What if the market is just ranging and it's not in your favor? How you going to hit the target? That's why it can cause you the stressful, because you chase your target here. That's the reason why I do have the daily target, but I also adapt to market condition, meaning that if today I see, for example, XAU USD, it's just a ranging, there is no volume for me to trade. Okay, either I look for another pair, or either to that day I don't trade, because even though I set $100 per day, but there is no opportunity for me to play the trade setup. Okay, my trade setup is not meet my criteria. So this is I don't trade. I do other thing else. Either I don't trade or I just do my other hobby. Okay, so like I just mentioned, there will be pro and con if you want to set a daily target. Okay. Any questions so far here? Or do you have any question? Okay, there is a question. Hello guys. Sorry, I just saw all the hello here in the app. How can I start trading? Okay, I'll just share with you guys like my journey, okay, into the forex market. Okay, last time I joined the forex maybe like 5 years ago in 2017. Okay, I trade part time while I'm still working full time last time. Okay, I start by learn by myself. Okay. Again, if you want to be successful in forex market, you need to have a knowledge. I just mentioned you need to have the habit of learning. Okay. If you don't like to learn, you cannot be you cannot stay in the forex market. So basically, okay, what I mean by that, okay, I go to the YouTube, I go enjoy those like community, I just learn all those like technique. Okay, I can tell with you guys all the technique out there. I know how to trade. Okay, because one thing you just have to ask yourself what kind of a trader you are. Either you are swing or you are scalping or just a day trade. You need to ask yourself first. Second one, you just go and learn all the technique that you want to learn. For example, I just go to learn those like demand, supply, support and resistance, or those after that. If you already know how to look at the chart, look at market structure, you can just maybe adapt to another like indicator, either Fibonacci, look at the eyesight, but it takes time. You cannot be successful. It just is within 6 months. Okay, within 6 months or 1 year, you may not be there, but you will know how to look at market structures. If you just like learning but you never stay focused, you also cannot be there. Okay, because I will tell you how I start. I watch YouTube. I only watch YouTube about forex only. I don't watch other like entertainment because I just want to stay focused. It took me for 3 to 6 months to understand like the key level. This is very basic. You need to know how to identify the key level. Okay, you need to know how to identify the price action. Okay, price action is very work well with gold like I just mentioned. Okay, for example here, if you just see your price action here, divergence here, at least if you were to short from this candle to this body, is a 60 pip. Okay, from second candle here open, we will target where my TP at the body of the wick. This is my TP is already 60 pip. From this one to this one, this is my scalping done. Okay, and price still falling because in the bigger picture, okay, I know that my support level I hit for is here. Okay, but again here there may be above from this level. Okay, this is like it takes time for you to be a success. Like I just mentioned, you need to have the habit of learning. Okay, and don't try to trade on a demo account. Demo account is just for you to practice their like interface, like how to place stop loss, how to use those like MT4, MT5. If you want to trade, you should trade with your real money. You can open like those like account like Send. Okay, because you trade with demo, there is no emotion involved, right? Because in demo you can just trade 100 lot, 1,000 lot, you lose 1 million, 2 million, you don't feel anything because there is no emotion involved. But if you trade with your own account, your own money, there will be emotion involved, and then you will get the feel of, okay, if you trade in the real market with your own real money, how you feel, how you're going to control your emotion. To me, I highly recommend you that don't trade with demo account because you don't feel anything. There is no emotion involved. Okay, different of copy trading. Copy trading, if you want to copy trade on those like social trading, it's also up to you. You just either look you copy those people who have very high win rate or whatever. But to me, I don't do copy trading, or I don't copy other people trade signal, because I want to survive in the forex market by myself, not rely on other people. Okay, what if you rely on the other people, then one day they disappear, or one day they like not in this world anymore, then how you going to trade, how you going to continue your forex journey, right? So just trade by yourself, okay? Because imagine if you know how to trade the forex, okay, you know the technique, you can pass on to your either your kid, your wife, or your boyfriend, girlfriend, whatsoever, okay? Because if you know how to trade, it's very easy for you to get like $100 per day, to be honest. Okay, once you have the knowledge, $1,000 per day also easy. Okay, especially gold, because gold is really volatile. If you know how to trade like 30 pip, okay, you enter for like 3 times, it's already almost 100 pip per day, and then maybe 100 pip you place one lot is already 1,000 per day. That is very easy, okay, if you have the knowledge. Okay, the question, Fibonacci is the best I use in trading. Okay, I do agree with you in terms of the Fibonacci you use in trading. The best or not, it depend. Okay, it depend on yourself. To me, none of the indicator or the technique is the best in the forex market. It depends, to me, it's kind of like combine everything together. It's to combine with other indicator, it combine with like fundamental or markets sentiment as well. But I use Fibonacci to trade. Yes, I do use. Okay, because if you know how to use Fibonacci correctly, you will get the level. Okay, and then if you know how to trade, for example here, do you think that I can draw Fibo based on this swing high and swing low? No. XAU USD, I think price should cap to extension. You can see that this is take profit for the swing trade. If you want to buy from here, that is your TP. TP1 here, and then this is the TP2. And why price revert from the extension, I don't know, but this is your sell entry, and they have extension 161.8. So this is your sell entry somewhere around this zone. Okay, that's why we will use the extension Fibo for either your take profit or either you play the stop loss based on the Fibonacci level. Okay, and now I cannot draw Fibonacci based on this swing high because the H4 time frame is not closing yet. But if I want to go to H1, yeah, based in H1, I already have swing high here. I have a swing low here. I can draw Fibo for my swing low to swing high. And then my first support, I do have 38.2% Fib level here. This could be my first support based in H1 time frame. And my second support here is gonna be this level. Okay, which is somehow is close to where? It's close to my 78.6% Fibonacci level. Okay, based in H1. H1 I can draw Fibo because I already have swing high, swing low, 38.2 and 61.8, right? And the extension price really come in, I don't use anymore. So this is the level, but where is my TP for my scalping is about here. My TP should be around this one. That could be my TP1 somewhere around here, which is I just take here first. Okay. Do you have any question, guys, to ask me? Or any question? I'll pause here for a while. So basically, if you don't have, we still have about 20 minutes. Okay, 20 minutes. Any pair you can request, I will look for trade setup for you guys. Okay, you can see that it's coming to my TP. Okay, you see that's my lovely goal. Okay, falling already. My TP should be somewhere here. Slightly up. No, that's my TP slightly below here. Okay, falling already. Let's see, we'll hit the TP. based on M15, M5. M15 also have the divergence as well. You can see that the divergence here. I can tell you that my trade setup is really simple, but it's very powerful. Okay, just keep it simple. The key, just study price action with the divergence and then look at market structure. That's it. Priority falling. Any question you want to ask me? If not, I just bring you guys to look at the chart. Okay. The question, there is a question coming in. Is it important to review and consider the dynamic of your trading asset analysis based on research is vital and success in trading? Yeah, I kind of agree with you. Okay. It is important, but it's not necessary. Okay, if you're already in the market for some time, it's good for you sometimes to review your either you review yourself. I used to do that, but not anymore because I think maybe I kind of like know where to stop when I hit the stop loss, because like I say, the more experience you have, okay, the more you are in the forex market for quite a few years, you should already know yourself very well. But if you are in the forex market for 3 years, 4 years, or 5 years, you still never be successful, and then you really need to reflect on yourself why you are not successful or you are still not in profit if compared with other people. Okay, there might be something wrong with you because you keep repeating your mistake. Okay, actually within 1 year you should already profitable in the forex market. Okay, doesn't mean like you in a forex for 1 year you still keep losing money. You still have those kind of habit of revenge trading. You haven't get any improve on your trading technique. That there might be something wrong, or you may not suitable for the forex market. That is the only thing I can say. Okay, because 1 year that is good enough to assess yourself whether you are this is the right path for you. Okay, because like I say, the forex market, not everyone, okay, can trade. Okay, somebody in the forex market 5 years still cannot make any money. So I think forex is not for them. Okay, like I say, forex is not for everyone. Okay, now gold is rising from where? From this swing low here, 24.16. Okay, it's already just say 60 pip from the entry from the this high. Okay, shall we just look for another pair? Okay, let me just look for, okay, let me highlight the key level for you guys. Go, the bear, where is your first resistance? Somehow just now is we have the extension, 167 here, tap in here. But again, I will do highlight the wick as well for my resistance zone. Okay, that will be another support level here. We can use the projection as well to see. You can see the projection here, which is 100% slightly there, is already falling. Don't need to use that, we remove. Okay, for the second support, but we do have the high impact new coming up today, right? Just take note of that as well. This is gonna be my second support right here. Let's say if price break above or hit my stop loss, next entry gonna be here. We just put an a neckline for the second resistance. Just highlight the zone, the body, and the wick. These were resistance zone. Okay, we can do Fibonacci from swing high to swing low here. Of it, there will be 78.6% and 50% right here. So in this case, I just leave 78.6%, which is here, meaning that if price break above my first resistance, this is gonna be another sell entry. we have 78.6% fib level over here. So this is my key level based on H4 time frame. Okay, I do highlight my support level here within the week. RSI is already almost like 65. You think it could go down? This one should go down but in H4. Double click to make bigger to see whether hit where. Almost at our resistance level. Hidden resistance somewhere around here. And RSI, we still think it might can like falling somewhere around here. Okay, base H1, okay. Do you think there is divergence here? There is divergence here. Our key level, divergence here. Double click RSI to make it bigger. This is your belly divergence here. That's why you short here. And we have a price action where in M5, right? M5 divergence, M5 price action. What about M15 also have a divergence as well. So it's short. Okay, see somebody asking any question? No question. Let me see my chat box here. Okay, no. Okay. Do you give mentorship? I do. Okay, I have my just say my student, 5 of them. Okay, I do give, but I cannot like like give so many, but I do have. I have 5 of my students. There is a scam, so just don't follow it. Okay, if you have any question, I just read. Okay, there's no question. I have 15 minutes. So you see that gold is falling. Okay, even though just now M5, you can see if you have a fear of the gold like reverse or something like that, you don't look for the lower time frame, because you know what a lower time frame a lot of noises. But to me, I look at M5, but in the bigger picture, if H1 is closed with the red and maybe the candle longer than this, right? I still hold my sale position. What you can see here, based on H1 time frame, you can see the wick. You look at the body, opening and closing, same, right? Meaning that you hold. You can see that by the opening. You know how to read the opening of candle. You can go here, where the opening. The opening is here, closing is here. Opening is here, closing is here. Meaning the opening, closing and opening is the same level. Can you guys see? I teach you how to read. Where is opening? Here, opening, closing, opening, closing, closing, opening, same level. Meaning that this is the key level that you watch out. Okay, these are H1. Look like the candle. You know, I even look at the chart. If I have time, I want to learn the light chart here also. Okay, for the light chart, right? They only capture the body, it's not the wick. What you can see here in the light chart here, it look like what M pattern. Somehow look like M pattern. It's going to break, gonna pull or how, I don't know. But it look like what they make an equal high based on the light chart, right? Because they not capture the wick, only the body. You see that it capture the body. Okay, you can look here. Either the kind of thing you want to see, either read, opening, closing, opening, closing, opening, closing, opening, and haven't closed. H1 haven't closed, so we don't know where they're going to close. You can see the candle still fluctuate here. Okay, you see that. Now it might revert up. We'll just see in H1. Okay, what is the simplest and most accurate strategy The simplest one, first, you need to know how to identify the key support and key resistance. That is the most simple and easy way. You see, firstly, either you want to draw like key support and key resistance based on either H1 or H4. You ask yourself, then you stick with only one time frame. So every day you want to do trade setup, I do in H4. Where is my key level? This is my resistance level. Why this is my resistance? You look at market structure, price on downtrend. Lower low, low high, lower low, low high, lower low, lower high. Should be continue like that, right? Market structure. Because one price changing momentum from downtrend to uptrend, they need to break this high to make a new high, pull back, become support level, and continue to uptrend. You need to look like that, right? Based on your USD. So your first resistance, where is your key support level? Look on your left. Okay, where is your support level? I will just put here. You need to know how to draw key support and key resistance, the key level. That is the very basic, but it's very powerful if you know how to identify correctly. Okay, after this, one price come to this level here. For example, I go to the lower time frame because I want to see or I want to wait for confirmation. I go to either M5 or M15. What you can see here, if you identify the key level correctly, you will see the price action over here. Okay, I use the I line to identify the divergence, or I want to see the overbought oversold. Okay, M15, I see the price action over here. What about M5? If I want to go down, you look at M5, you'll see the bearish divergence versus the I side here. Okay, meaning that if you identify the key level correctly, you go to the lower time frame, they will tell you the confirmation. Either price action, either divergence here, and then you short, and then you hold. You get what I mean? That is the simplest way for you to trade. You don't need to know those like SMC, IZT, or either elite wave or harmonic pattern. If you have time, you can learn. But the simplest way to trade, identify the correct support and resistance, go to the lower time frame to look for price action, divergence, you can trade already. That's it. Okay. Big shark control markets as they have access to the real trading prices. Price has what? Price here locked in time and trading done by the trader at stock market. Yeah, but because we are retail trader, right? So we want to trade the same direction with the big shark or big boy in the market, right? So we don't, nobody know, because I'm also not working in those like stock market or whatsoever, but I consider myself a retail trader. So we want to find, or we want to know how they trade. Nobody know, but we just want to at least trade with either with the trend, trade with the same direction of those like big boy in the market. But to me, that doesn't really concern so much, because like I just mentioned, the easy or simplest way to trade, you just need to know how to identify the key level. Again, last time they just said that, okay, I trade with support and resistance. But nowadays, if you talk with other new trader, okay, when you say like, oh, you just trade with support and resistance, they will look at you, have the face like, that is like old fashioned, right? Nowadays, they just call like demand and supply. Actually, it's just the same meaning of support and resistance. Where is the supply? Supply is just a resistance, okay? Support is just a demand. They just want to change the new word, okay, for us to get confused, but actually it's the same meaning. You start the like deeper, actually just the same meaning. Okay, last time we call this, what we call here, we call Dow theory, right? The new way they just call market maker, lower low, lower high, lower low, lower high. Nowadays nobody just say, okay, Dow theory, but it's here Dow theory. Okay, just like market moving down here. Okay, so yeah, just identify the key level correctly, you can trade. Okay, if you're not good at the lower time frame, just look at the H1 or H4. Okay, because H1 as M5 at especially gold will be very volatile. You imagine we look at M5, you look at M5 gold. From this level, it bounce off how many pip? From this one to this one is about 30 pip for gold, and then you might get panic already. Okay, but I look here, I just want to see, like I just mentioned, it's somehow you need to take note that in a lower time frame, price is not go all the way straight. Okay, it will go up, go down, go up, go down. Some go up to your entry and then continue to go down. But if you just want to stick with your higher time frame, you know that this is your key resistance level in H4. In the lower time frame, definitely you will see price fluctuate, like go up, go down, up, down, up, down. So if you're not good at lower time frame, don't look at M5 or even M1. I can look at M1 because I just want to see the price action here. Really nice price action. I can open either this candle and continue to hold to your TP. Okay, my TP is another 40 pip. Then we'll just see whether it's gonna hit my TP or not. All right. Okay, guys, any question? I have 5 minutes left here. Okay. Oh, okay. Some of you guys asked me to do what, Tesla. I never look at that. What is a Tesla? TR? TRESL. Where? Which one? Tell me the code here because I never look. Bitcoin? Tesla, what is the code here? I don't trade, so I don't know. TL? T what? You guys still here? I just saw your request. THES? I don't know. Okay, just look for Bitcoin. Okay, pick one before I end. I have 5 minutes. Bitcoin. You see, Bitcoin at my resistance, second resistance, and falling. Okay, let me explain. First, identify the key level first. I look for the daily time frame because I want to look at market structures. Really clearly, either this is the first resistance here, here. Let me look at the momentum. Already sell. Where your price action in daily time frame? This is the one. Your price action is here. I think there will be divergence in daily time frame. So you hold your short position. Okay. Divergence happen in daily time frame is really strong and powerful. Your price action is here. Look at daily time frame and I draw the level. This is your resistance level in daily. What about H4? Well, with the price action here, that you have a divergence as well, I believe. Where your divergence, double click on RSI, you will see very clearly your bearish divergence here, right? Where price go, your price action, price make a higher high, indicator with make a lower high. If you were to see that, you may not see the divergence. If you double click, you will see it very clearly. There's a bearish divergence here. And that's why you short where your price action in H4 time frame, which is this one. Then falling, where your key level, this is gonna be your first resistance. My second resistance base here is my second resistance, which is already TP. If you were to short here, okay, price break below this level is a neckline, pull back, continue to short TP1 already at the first support right here. Your first support, I think it's line up with 61.8% fib level. So you can see that price could not go below your Fibonacci 61.8%. After price come to first support, you can see the rejection. I see the wick. You can see that. So I still highlighted you my support level. I did not ask you to buy now. Okay, we will look again for the confirmation. Okay, this is gonna be my support level. What is your another support level here? Look. So support pullback, resistance, become support, support. Okay. Now, is it good for to buy? No, you can see that this is selling. Okay, meaning that this either in H4, I monitor this level. I'm not gonna buy from here. I'm waiting to short based on H4. Okay, price is like within the cloud. Now it's acting at the support. So look at daily. This is how it daily look like. Don't forget that in daily we have bearish divergence here. Okay, meaning that price still can falling even more. At least second support that should be TP1. In the picture daily time frame. Okay, our second support is where 23.6%. So now they had the Fibonacci line up together based in H4 and based in H1. Okay, if price go up here and then you short, okay, somewhere around here, H1 time frame. I'm not gonna buy up because I buy and sell for the BTC. So this is the key level. I can do the extension base here. Extension, that's why price come to this level 127 and then bounce off. Oh, I think I need to end the webinars. Okay, so this is my key level. Okay, guys, but for BTC. Okay, that's all for today, guys. I hope to see you guys again in the next webinars. Okay. Okay, that's all for today, guys. Thank you so much for your time. I would like to have more contact with you. Do you have any channel? You come and join my webinar. Okay, I will let you know because now I need to end the webinars already, guys. Thank you so much for your time. We'll see you guys again in the next webinar. Take care, guys. Bye for now.